Come to the chapter 13, investing in mutual funds. We are using focus on personal finance. This is owned in terms of copyright by McGraw-Hill, 2022. Ying, Yang, and Getty Image are the publisher. All right, let's start this chapter. This is quite a long chapter. It's about 44 pages. There's about four learning objectives on this chapter. The first one is to explain the characteristics of mutual fund investments. Number two, clarify the mutual fund by investment objective. Number three, evaluate the mutual funds. Number four, describe how and why mutual funds are bought and sold. Mutual funds. What is mutual fund? Mutual fund is a pool of money of many investors. Shareholders invest in a variety of securities such as stock, bonds, money market instruments, and other assets. It can be used for retirement accounts, including traditional individual retirement accounts, both IRAs and 401k and 401b retirement accounts. Based on the concept of opportunity cost, you must be willing to take some risk if you want to get larger returns on your investment. Okay. All right. Why is investor purchase mutual fund? Like me, when I invest also in mutual fund. The reason is for my retirement, using through RRSP in Canada, and for in the US will be through 401k. Mutual funds have been around for a long time. Began in Europe in 1700, become popular in US before the Great Depression in 1929. The statistics also illustrate how important mutual fund investment are both for individual and national economy. Almost 99.5% individual own mutual fund in the US. So the same thing, the percentage is almost the same in Canada. 56 million households own mutual funds. With 17.7 trillion in assets, U.S. mutual fund industry is the largest in the world. Psychology of investing in funds. Major reason investment purchase mutual funds. Number one, professional management involves fund managers try to pick the right security for their funds portfolio. Number two, diversification offered by mutual funds. Spell safety because the loss incurred in one investment contained in a fund may be offset by gains from other investment in the funds. And then type of security including portfolio or Fidelity Balance Funds, Exhibit 13.1. This is by Fidelity Balance Funds. Sources will be Fidelity. Example is percentage, information technology, healthcare, financial, industrial, communication service. This is the top industry sector they choose. This is the weighting side from 21% all the way to 10%. In terms of asset allocations, percent of total assets from domestic stock, bond, international stock, cash and other assets from 64% to 3.3%. Diversification include portfolio Fidelity Balance Funds, Apple, Microsoft, Amazon, Alphabet. Example here, Apple and Microsoft is the two largest holding for these balance funds. Example here, an investment considering diversification in 13.1, investment in 35 billion in Fidelity Balance Fund. It represents ownership in over 10 different industry sectors and a wide selection of quality stocks and bonds. Characteristic of funds, it is closed end, which is funds that are traded, which shares are issued by investment company only when the fund is organized. Only a certain number of shares are available to investors. Most are actively managed and traded on the Floral Stock Exchange or in the OTC market. OTC stands for over-the-counters. AFT ETF, which is exchange traded funds, invest in stock and securities contain specific stock and securities index or has shares that are traded on the security exchange or in the OTC market. The fee is generally lower than those that closed or open-end funds. Okay. Open-end funds are mutual funds which shares are issued and redeemed by investment company or the request of the investors. Investors are free to buy and sell shares at the net asset value. Approximately about 4% of all mutual funds are closed-end, offered by investment companies. Approximately 2,000 or about 70% of the fund are exchange-traded funds, and approximately 9,600 or about 79% of mutual funds are open-ended funds. NAV, net asset value. What are they? NAV. It is the market value of the securities contained in the fund's portfolio minus the fund's liability divided by the number of shares outstanding. Example, the net asset value, American Frontiers Mutual Funds. Investment contained. New American Frontiers Mutual Fund have a current market value of 980 million. The fund also has a liability of total 10 million. These mutual funds got 40 million shares. The net asset value per share is 24.25 cents. This is the way to calculate net asset value equal to value of the funds portfolio minus liability divided by number of shares outstanding, which is 980 million minus 10 million divided by 40 million. You got 24.25 NAV per share. The open-ended fund is the net asset value is calculated typically at the close of trading of each day. Cost load funds versus no load funds. Load funds are mutual funds in which investors pay a commission every time they purchase shares. Maybe as high as 8.5% purchase price for investment, or by average is between 3.5% and 5%. Fees are often waived, lowered, or shares purchased for retirement accounts. Fees are often lowered for investors as well who make large purchases. Advantage is that fund sales force will explain the fund, will help you to determine which fund is appropriate and our advice. The no-load funds are mutual funds in which the individual investor pay no sales charge. Some funds are charged a contingent deferred sales load, a fee ranging from 1 to 5%. That shareholders pay when the sale shares in the mutual funds. Example here, sales charge, calculation, contingent deferred sales load. The calculation by JP Morgan Large Cap Growth Fund charges a sales load of 5.25%. If you invest 10,000, you must pay 525 commissions to purchase your shares. The logic calculation, load charge equal to dollar amount in investment times the load stated as percentage. 10,000 coming from here, 525. Where is coming from? Because it's 5.25% here. Okay, so that's how you get. So amount available for investment will be investment amount minus load charge will be 9475. That's the fee. Another example. Assume contingent deferred sales or the mid-cap growth fund. Assume you withdraw 6,000 from B shares that you own in Alger Mid-Cap Growth Fund with a year, your purchase date. You must pay a 5% fee in withdrawal during the first years. Your fee is about 300. You will receive about 5,700 as shown. So how you can calculate? Contingent deferred sales load equal to amount of withdrawal times fee stated as percentage. 6,000 is coming from here. 5% is coming from here. You got 300. The amount you will receive, amount of withdrawal, which is 6,000 minus contingent deferred sales load, which is minus 300. Total you get 5,700. Cost management, fees and other charges. Components that sponsor funds, just management fees, a fixed percent of the funds, and as a value of, on a particular date. Annual maintenance fee range between 0.25% and 1.5%, with the average being 0.5% to 1%. Investment firm may also levy 12B minus 1 fee, a fee that defrays costs of advertising and marketing of a mutual fund. These fees are taken out of the fund's asset and cannot exceed 1% of the fund excess per year. Typically, this is an ongoing fee that is charged annually. Expense ratio is the amount of investor pay for our mutual funds, management fee, and operating costs. The load funds, example, up to 8.5% purchases, the amount, no load, no sales charge. Contingent deferred sales load, which is 1 to 5% fees for renewal. For management ranges from 0.25 to 1.5% per year of the fund assets. 12B minus 1 fee cannot exceed 1% of the fund asset per year. Expense ratio, which means that the customary one will be the amount investor pay for all fees and operating costs. Financial expert account funds with expense ratio is 1% or less. Class A shares, commission charge when shares are purchased. Class B shares, which commission charge when money is withdrawn during the first 5 years. And Class C shares, no commission to buy or sell the shares. Okay, this is the difference here. This may have a small fee withdrawals and often have higher ongoing 12B1 fees. Stock funds, there is multiple area. Aggressive to growth funds, which seeks rapid growth by purchasing stock for which the price is going to increase drastically in a short period of time, which is aggressive growth fund. And then you have an equity income fund, invest in stock issued by companies with a long history of paying dividends. And then you have a global stock funds, invest in companies or companies throughout the US and including the US. And growth funds invest in companies expecting higher than average revenues and earnings and growth. Index funds invest in the same companies including index such as S&P 500 stock index. International funds invest in foreign stocks sold throughout the world. Again, manager of the mutual fund tailor their investment portfolio to the investment objective of their customer. The major fund accounts are stock funds, bond funds, and other funds. And we have another category, large cap funds invest in companies with total capitalization of over $10 billion or more. Mid cap funds invest in companies with total capitalization of 2 billion or to 10 billion. Regional funds seek to invest in stock traded with one specific region of the world. Sector funds invest in companies within the same industry. Small cap funds invest in smaller, lesser known companies with a total capitalization of between 200 to 2 billions. Socially responsible funds avoid investing in companies that may cause harm to people, animals, and the environment. Bond funds, example, is high yield bond funds invest in high yield, high risk corporate bonds. Intermediate corporate bonds invest in investment grade corporate debt with maturity between 3 and 10 per years. And intermediate US government bond funds invest in the US treasuries with maturities between 3 to 10 years. And long-term corporate bonds invest in investment-grade corporate bond issue with maturities in excess of 10 years. Bond funds. The long-term US government bond funds invest in US Treasury securities with maturities in excess of 10 years. Municipal bond funds invest in the municipal bond that provide investors with tax-free interest income. Short-term corporate bonds, which is invest in investment-grade corporate bonds issued with maturities of less than 3 years. The short-term bond funds invest in US Treasury security with maturity of less than 3 years. The world bond funds invest in bonds and other debt securities offered by foreign companies and government. Example, if you live here, Japanese bond, Yankee, I call it a samurai bond. Okay. Other funds. What are the other funds? Asset allocation funds invest in a different type of investment, including stocks, bonds, fixed income securities, and money market instruments. Balanced funds invest in both stock and bonds with the primary objective of conserving principal and providing income and providing long-term growth. Fund of funds invest in share of other mutual funds. Life cycle funds, sometimes referred to as a lifestyle funds or targeted funds, they are popular with investors planning for retirement for a specific date. And money market fund invest in strategic deposits, government securities, and other safe and highly liquid investment. And then you have total stock market funds, which is designed to provide investor with exposure of small stock and traded in the US, including small cap, mid cap, and large cap stocks. And you have a family fund, which exists when investment company manages a group of mutual funds. That means that each fund with the family has a different financial objective and allows shareholders to conveniently switch their investment among funds as different funds over potential financial reward or securities. Charges for exchanges, if any, in general is small. Just go back. Okay, we have the next one, total market run. Did we have I spoken about this? The benefits of portfolio construction. Portfolio construction is the process of choosing different types of bonds and stocks and funds and other investment alternatives to obtain large return without reducing risk. It's a very personal process. Your investment is often driven by your goals, your tolerance of risk, your age, how much money you have to invest, and how long you have to retire, and other factors. Nation economy, world economy, unemployment rate, inflation rate, interest rate, and host of other factors that could affect your investment portfolio. Choosing the right fund for your retirement account. So in the US, it's based on 401k. In Canada, we'll be using RRSP. That's the difference in the name term, but the concept will be the same. Number one, do you want to pass in retirement account? Yes, there's an employer-sponsored retirement account provide a way to reduce the amount of current income tax, and this with help from a paycheck. When I was working for BMO, RSA, I set up an RRSP. Every month, I contribute about $100 to help reduce my tax, basically. There's one example. Many funds will match your composition up to a certain limit. So like in BMO at that time, there's about 6% cap for everything. They give me up to 6%. Okay. And for example, if I put 1,000, they'll match up to a certain limit. Number two, which mutual fund do you want to invest in? Consider long-term goals and time value of money concepts. Number three, what is the stages in your life? Younger workers they choose more riskier funds, while older workers tend more conservative funds. How do you make a decision to buy or sell mutual fund? So, do you want to manage fund or an index funds? What is the managed fund? Most mutual funds are managed funds. Professional fund managers choose the securities that are contained in the funds and decide when to buy and sell securities in the funds. Consider how long the present fund has been managing the funds and higher annual expenses. Index fund is the passive funds. Majority of funds fail to outperform S&P 500 index or expense ratio than managed funds. Typically, the expense ratio for managed funds are approximately 1% or higher. Expense ratio for index funds are approximately about 0.5% or lower. The Internet provides a service. Information about mutual fund investment on the Internet can be accessed in three ways. Okay, from MarketWatch, MSN Money, and Yahoo. There's number two, access webpage of investment client that sponsor the mutual funds. Number three, there's a professional advice service such as Morningstar, Value Line, and Refinitiv Flipper that provide detailed information on mutual funds. Through many of the services may require you to pay a fee or research and recommendations. There's also a prospectus and annual report with the prospectus. When an IPO, there's always a prospectus. Okay, there's a secondary market. You can always also review the prospectus, which is provide the information on the fund or objective. Statement describing the risk factors associated with the fund, description of fund past performance, statement describing the type of investment in fund portfolio, information about dividends, distribution and taxes, information about the fund management as well, information about limitation or requirement, if any. The fund must also earn or choosing investment, and then process to open an account or to buy sell shares in the funds. Description of services provided by the investor and fees for services, and information about how often the fund's portfolio changes. Remember that investment companies sponsoring a mutual fund must give potential investor perspectives. You can also obtain prospectus by accessing the investment company website or by calling a toll-free phone number that is, or by a return request. That's the key part, okay? What is annual report? It contains a letter of president of investment company from the fund manager or both, detailed financial information about the fund assets and liabilities, performance statement of operations, and statement of changes in asset. They have a scheduled investment and a letter to funds independent auditors that provides opinion as to accuracy of the fund financial statement. Finally, again, newspaper. That is business and investment-oriented packaging. They are excellent sources of information about mutual funds. Bloomberg Business Week, Forbes, Fortune, Kiplinger, Personal Finance, and Money are an example. These are the name of the few mutual funds that are being used in terms of information. The several mutual fund guidebook are likely available at your local bookstore as well, or public library. Many large metro newspapers, Wall Street, and Journal often provide news and information about the funds. There's also the Mechanical Mutual Fund transaction. Okay, for many investors, mutual funds have become an investment choice. Okay, such as 401k, 403. In Canada, we RRSP. Okay, most individuals invest mutual fund to achieve long-term financial objectives, basically to retire comfortably. You don't want to work on your during retirement. For 2,000 or less, you can open an account or begin investing. Excuse me. What are the advantages? Diversification, position management, ease of buying and selling shares, multiple withdrawing options, division of investment dividends and capital gain distribution, switching places with the same funds family, service that include toll-free telephone numbers, complete records of transaction and obtained for saving and checking. Disadvantage, purchase withdrawal cost, ongoing management or 12.B1 fees, poor performance that may not match that of the Standard Poor 500 index or some other index, and inability to control when capital gain distribution occur, and complicated tax reporting issues, and do potential market risk associated with all investment. Some salespersons are aggressive and unethical. That's the key part. Just focus on your target area Make sure you have a good professional advice. That's the key. Return on investment. Purpose of a closed-end fund, exchange rate fund, open-end fund is to earn financial return, which may be done in one of three ways, such as income dividends, are earnings fund paid to shareholders from its dividend, interest income, capital gain distribution. Number two, capital gain distribution are payments made to fund shareholders that result from the sale of securities in the fund's portfolio. Number three, capital gains are the profits that result when investor buys shares of fund at low price and then sell the shares after the price has increased. Remember, many exchange-traded funds may pay monthly or quarterly income dividends, but exchange-traded funds don't usually pay end of the year capital gain distributions. Okay. Tax and mutual fund. Taxes on reinvested income dividends, capital gain distribution, and profit from the sale of shares can be deferred if the funds investments are held in retirement accounts. These taxes may be limited if investors are held in both IRA, which is RSP or IRA, and all the questions are met. Okay, then this is US. IRA is US. For mutual fund, we in a taxable account, income dividends, capital gain distribution, financial gain and losses of the sale of the funds are subject to taxation. So in Canada, it's also subject to taxation. To problem the flop with taxation of mutual funds, even you choose to invest dividend return, they are still taxed in a taxable amount and must be reported on your federal tax return as current income. You have no control over when the mutual fund sells today, and you will be taxed on the capital gain distribution. It's always tax. That's the key part here. In Canada, it's also the same, much higher tax. Purchase option, you can buy shares at a closed-end fund, ETF to stock exchanges or the OTC market. To purchase shares in the open-end mutual fund, you may use your options such as 1. Regular account transaction. Number 2. Voluntary saving plan. Number 3. Using contractual saving plan. And number 4. Using reinvestment plan. Okay. That's his own options. Okay. You can see in the detail in terms of the each option. Withdraw options for the closed-end fund. ETF are listed on the stock exchange, traded on the OTC market. Investor may sell shares in such fund. Others to non-investors. Shares in the open-end fund can be sold for any business day to investment company that sponsor the funds or brokerage funds. In this case, shares are redeemed at their NAV. Withdrawal options. So most funds have provision that allow investors with shares that have minimum asset value at least 5,000 to use 4 options in the system to withdraw the money. Number 1, by withdraw a specific fixed dollar amount of each period. Number 2, by liquidating or selling off a certain number of shares at each investment period. Number 3, to withdraw a fixed percentage of asset growth. Number 4, withdraw of all asset growth that result from income, dividend, gain, and distribution earned by the funds during the investment period. Chapter summary. The chapter summary basically explain the character of mutual fund investment. The major reason investors choose a mutual fund are professional management and diversification. Mutual funds are also a convenient way to invest money, especially for retirement account. There are 3 types of fund: closed-end fund, exchange-traded funds, and open-end funds. Closed-end fund is a fund whose shares are issued when the fund is organized. ETF is a fund that usually invests in stock or other securities contained in a specific stock index or security index or both, closed-end and exchange-traded funds, and are traded on the stock exchange or in the over-the-counter market. Open-end fund is a mutual fund whose shares are sold, redeemed by investment company at the NAV at the request of the investor. Chapter 3, continuation. Mutual fund can be classified either A share or B shares or C shares. Okay, C shares, just smaller fees. Okay, you can also purchase normal fund, which you pay no sales charge. Other possible fees include management fee and 12B1 fees. Okay, there's a lot of fees in the mutual funds. On objective number 2, classify mutual funds by investment objective. The managers fund tailor the investment portfolio or to the investment objective of the customer. The major fund categories are stock funds and bond funds. There are also funds that invest in mixed or different stock, bonds, and other securities that include asset allocation of funds, balance funds, and total market funds. Today, the market investment companies usually use a family of funds concept, which allows shareholders to switch among funds and different funds to offer potential growth, financial reward, and security. And then in tools, you need to also to reduce risk, often construct investment portfolio. Portfolio construction is the process of choosing different type of stock, bonds, and funds and other investment areas to obtain larger return while reducing the risk. Many investors also purchase funds for their retirement plans in order to achieve their financial goal. So, point 3, 13.3, evaluate the mutual fund, which is responsibility for choosing the right mutual fund rests with you and as an investor. Often the first question that investor must answer is whether they want to manage a fund or index fund. With a managed fund, professional fund manager choose securities that are contained in the fund. Okay, some investors choose to invest to an index fund because all managed index funds have always outperformed the manager of the managed funds. We always index fund is much better because they usually outperform historically. To evaluate different mutual fund, investor can use information on the internet from professional service and fund prospectus as well as annual report and newspaper. Alright, number 4, describe how the mutual fund is bought and sold. The advantage of mutual fund have made no mutual fund invest choice for many investors. For 2,000 or less, you can open an account or begin investing. The shares of closed-end fund, exchange-traded funds are bought and sold organized stock exchanges or in the over-the-counter market. The shares of open-end fund may be purchased through salesperson as well as to salesman who is authorized to sell them. But anyway, the seller has to have a license. That's the key part, mutual fund license. Okay. And then 34, the shares in open fund can be sold on the investment company that sponsors the fund. Shares in mutual fund can receive return in one of the 3 ways, such as income dividend, capital distribution, and then when the funds are balanced in the fund at a profit, and the capital gains when the shareholders sell shares in the mutual fund at higher price than the price paid. To ensure that you have all the questions, you need to file tax operating purposes. Also, it's essential you keep your record. There's a number of purchase withdrawal options that are available for mutual fund investors. That basically concludes this chapter. I will post it in YouTube as well as Puzzle, okay, for your interactive learning. Thank you, everyone. Hope you enjoyed this video. Thank you. Bye-bye.